The Aussie versus US dollar fell toward the end of trading yesterday, and in the process tested a key target area on the downside. We've since rotated back to the upside and then back lower, back toward that target support area. I'll talk about the technicals that are driving this currency pair as we head toward the end of the trading week and look forward to next week. So let's get started. Where tariffs are concerned, that tends to hurt the Aussie versus US dollar, and we've seen in price action this week a steady move to the downside for this currency pair. Now, admittedly, over the last few days, we've seen more up and down price action, but late yesterday, the price may have reached an exhaustive target. That target came again in this swing area here. The swing area is defined by a number of different swing lows going back to this period right here. We fell below that area right through here and then tried to reestablish, or did reestablish, support here before moving to the upside. We came back down to this area and consolidated around the area up and down before deciding on the downside, and then rotated back to the upside. There's some instances where the price did try to find support here, try to build off of that level. Then we had this one big sharp move to the downside before reestablishing support near this area and moving to the upside. So we return back to this area, that is between 0.61917 and 0.64. Nice round number, 0.64 there. We found some support buyers not only at the end of the day, but also in the first hour of trading in the U.S. session, or the Asian session last night, and rotated back to the upside. Now on the top side, earlier this week, we did fall back below the 100-hour moving average and didn't return back to that level all week. The price, with the price moving lower and consolidating, that moving average has caught up with the price, but we still remained felt a distance away from that moving average on the rotation back to the upside. We did also move above the 50% retracement of the move up from the January low to the January high. That was broken in trading all during the week. It's kind of been made a mess of it through here with the ups and down volatility from all the economic data that we've had this week, including central bank policies. But being below that 50% retracement is more bearish, and we've started to move back down toward the closing level from yesterday's trade around the 61.8% retracement. Going forward, as long as the price can remain below the 100-hour moving average, I would keep the selling sellers more in control. That's this level right here, and look for further probing to the downside. On the downside, this area right through here is going to be a key support level to get to and through. If we do get below that level, then we'll start to look toward this swing area through here, which is home to a number of different swing lows and swing highs going back in time, mostly swing lows before moving to the upside. So that would be the other key target on the downside going forward. If we do break above the 100-hour moving average, we'd ultimately have to get back above the 200-hour moving average. Earlier this week, the price broke below that moving average and found bullish sellers right here, here, and here before moving to the downside and away from that moving average. So getting above that level, it's starting to move to the downside. So we could see a rotation here in that moving average. That would make it an easier hurdle to get to and through, but we still need to get above it to increase the bullish bias going forward. So sellers in control in the Aussie versus US dollar. We do have our risk levels on the top side. We have our target levels on the downside. We'll see how it all pans out. My name is Greg McGlosky. Good fortune to your trading. Bye-bye now.